Hey, what's up guys? Welcome back to the channel. Welcome back to another video. Today we're going to be talking about the stock market and specifically how I make money by buying and selling stocks. Disclaimer, I am not a licensed investment advisor, and the information I'm going to be sharing today on this video is just my personal information. If you're interested in buying and selling stock, my recommendation is you do your research, or you go find a licensed investment advisor that can help you buy and sell stock. Over the last 20 years, I have been self-taught. So what I'm about to share with you are just my techniques that I personally use, but I also think if you are someone that's looking for a way for long-term growth and trying to figure out how do you do that, the stock market, in my opinion, is one avenue to consider. Now, having said that, let's go ahead and move on. Now, I know most of you guys, if you've been following the news and if you've been watching what's going on in our economy, both here at home in the United States and globally, the economy is doing well, but the stock market itself has taken a decline over the last week or so because of some external things taking place in the world, and a lot of investors are taking their money out of the stock market and putting their money in a safe haven. When I say a safe haven, a lot of them are taking it out of the market and just leaving it in cash, or they're going to other investment instruments that give them a little bit more guarantee on their principal. So the stock market is taking a decline because of that. You got a lot of institutional investors, you got a lot of individual investors, private investors are taking money out of the stock market because they're not sure what the long-term effect of this coronavirus is going to be and other external things that are going on in our world. But a guy like me who looks for value, it's an opportunity while the market is down to go in and find value in the form of blue chip companies who, a week ago, 10 days ago, they may have been trading higher price per share than they're trading today. So I go in that situation and I look for those companies. I buy their stock while it's low based on what's going on in our global world and what's going on here in the United States. I'll go in, I'll buy that stock, and I'll hold it. And the reason I can go in and buy stock and hold it like that is because I have a certain amount of money that I earmark for investing in the stock market. And that's one of the things I recommend for you guys is, have money set aside. So when opportunity comes about, you are able to, at that point, go ahead, pull that money out of savings or out of wherever you have it, and then I would look to put that money into the stock market now, since I can buy at a discount. Now, when I say buy at a discount, I'm still talking about your mainstream blue chip Fortune 500 companies. At least for me. Again, this is what I do, guys. You may do something different. Your licensed investment advisor may tell you something different, and that's okay. I'm just telling you, I only invest in blue chip, proven companies that have been around for a long time that I believe will be around tomorrow. So once I narrow down who those companies are, and for me, it typically is companies who are in the financial services industry, like banks. And once I do that, I go in and I take my money and I buy shares of that stock. Now, let me give you an example of how that would work. So if I found ABC Bank, and 10 days ago when I do my research, and historically, over the last, say, 18 months, their price per share of stock was $10 a share. But with this recent downturn in the stock market, because of these external forces, like I said, like the uncertainty of coronavirus and things like that, the stock has went down to $8 a share. That's a $2 share decline in value for a blue chip company. So I got my $10,000 over here on the sideline waiting for this type of opportunity. So I take my $10,000, I go in and purchase shares of that company through their stock, and I spend my $10,000 on it. Now, in return for that, I'm gonna get 1,250 shares of that stock at $8 a share with my $10,000 investment. So I've purchased the stock and I'm just holding it. And the goal for me is long term. And in my definition, long term is holding the stock for at least 12 months or longer. That way, I can get better tax treatment if I decide to sell that investment after 12 months. And we'll talk about that in a minute. But let's concentrate on the 1,250 shares of stock that I bought from ABC Bank with my $10,000. So I'm holding on to the stock 3 months, 6 months, 12 months, 18 months. So in 18 months, I decide, matter of fact, let's not even use 18 months. Let's just say in 12 months, I decide to move on from that stock. Our global marketplace as it relates to the coronavirus and these other external sources, those things are, we're pretty sure we got it under control. Those things are stabilized. Now you can see the market starting to move again. I'm watching my ABC Bank stock. It goes from $8 a share. It gets back to $9 a share. It gets back to $10 a share, which is where it historically had been trading. At that point, maybe that took a year to get there. Maybe it took 12 months to get back to $10 a share. I decided to sell the stock. So I'm going to take my 1,250 shares and I'm going to sell those shares at $10 a share. Remember, my original investment was $10,000. But since that stock went up $2 per share over the last 12 months, my investment of $10,000 has grown to $12,500. So in 12 months, I made $2,500 on a $10,000 investment. For me, guys, that is a deal I'll take all day long. Now, I know for some folks, they're saying $2,500 in 1 year on 10 grand, I could have doubled my money. I could have tripled that 10. Maybe you could, maybe you wouldn't have. But you got to understand with investing, I never have all my eggs in one basket. So for me, stock market investing is about long-term growth. It's not about me investing $10,000 today and turning around tomorrow and make 30. I'm an investor. I'm not a trader. Traders go in every day and look for gains every day and move, and that's not what I do. I'm an investor, so I understand the power of investing in something for the long term. So I made $2,500 on that stock purchase. I didn't have to do anything other than take my 10 grand, put it in, take it out in a year. And all the stock needed to do for me was to go back to its normal trading price, which was $10 a share, up from $8 a share. That's how I make money in the stock market. And I just multiply that over more than $10,000. To be a prime example, I got $250,000 in stock in one particular bank. And I get a 5% dividend per year when I annualize it on that stock. So that's about 12 grand, 12.5. And I've had that stock for many years, guys. So let's just take the last 5 years. I've probably made $60,000 just in dividends, not appreciation in the stock price, but I'm just talking about in free dividends that they send me every quarter. Well, they don't send it to me, I reinvest it back into more stock. But when I extrapolate that over the last 5 years, it's about $60,000 in dividends, which is huge for me, guys. So down the road somewhere, you know, I'm gonna really reap the benefits. It's not really 60,000. It's gonna be probably 3 times that amount when I really do decide to start taking money out of that investment. But that's the power of 2 things: dividends and appreciation in the stock price. So those are the 2 powerful things that I've used over the years. Long term, again, long term, 12 months or longer, I've used over the years to really increase my net worth. And I think you guys should consider that. I got a question the other day on my Instagram, a DM on Instagram. Guy was saying, hey man, I got $5,000. You know, what do I do with it? I want to invest it. My recommendation was take the $5,000. If you have not maxed out a Roth IRA, take that $5,000 and put it in a Roth IRA, and put it in something like a Vanguard or a Fidelity investment through your Roth IRA. Reason I said that is because, one, you know, you've already paid taxes on the money, so any growth on that $5,000 is going to be tax free. You don't have to pay any taxes on the growth, and you can kind of treat it as an emergency fund as well, because the money that you've already put into it, the $5,000 you put into it, you've already paid taxes on that $5,000. So if you need to take that $5,000 out 6 months from now or a year from now because an emergency popped up in your life, you can take your original principal $5,000 out and not have to pay any taxes on it. So in my opinion, for someone looking to get in and invest in, if you're not already maximizing a Roth IRA, my recommendation is take your money and put it in a Roth IRA to the maximum. So, and I believe for 2020, that's $6,000, if I'm not mistaken. Take the money and put it in a Roth IRA. That's your biggest bang for your buck, in my opinion. Once you maxed out that Roth IRA and you still want to do some investing in the stock market, then at that point, you should go ahead and consider a taxable investment account like I have, where you can start buying and holding investments, stock investments. You can do mutual funds, you can do index funds, you can do whatever you want, but I just do individual stocks. I feel more comfortable with that. But that's what I would recommend to someone, because that's what I do. And over the long term, it's served me well. This is a time where you should be going in and buying, because the stock prices of these companies are undervalued. Go in and pick you up some undervalued stock of good blue chip companies, and then down the road somewhere, you'll get a nice appreciation on it, in my opinion. Actually, not my opinion. History tells us the stock market is going to appreciate. Yeah, it's going to have its peaks and valleys, but history tells us, if you look at the history of the stock market, it's going to have a nice return, man. So that's how I use situations like we're in today, where the stock market tumbled over the last 10 days because, like I said, of external forces. But I still use that, and I take advantage of that to make money. So a year from now, on the shares, if I decide to pick up any, those shares are going to be worth more, in my opinion, in a year than they are today, because I don't believe we're headed to a recession. No, none of the metrics out there that I look at show that we're headed to a recession. You got still unemployment is at an all-time low. Interest rates are at an all-time low. More people are, when you look at the job reports, we're at an all-time high with jobs in the United States. We got our China, United States trade thing is sort of stabilized. They're working on a long-term plan for that. Really, the only external force now that's driving the stock market down is this coronavirus thing, because we're just not sure kind of what's going on with that. Outside of that, once they stabilize that, you'll see the market start going back up. So my thing is before that thing stabilizes, go out and consider buying you some stock, man, or some type of investment, whether it be mutual fund, whether it be individual stocks, whether it be index funds, whatever it is, consider it, because this is a good opportunity to get you some bargains, guys. Well, I had been getting a lot of requests to do more stock market videos, so I thought I'd do one today. I hope it was helpful. Again, guys, I'm not a stock guru. I'm not an expert. I'm not a licensed investment advisor. I'm just someone who was self-taught. I buy specific individual stocks, typically in the financial services sector. That's what I stick to. Every now and then I'll do something outside of that, but most times I stick to what I know because I'm a 25-year retired banker. So I feel more comfortable sticking to companies that are in the financial services sector when I go to buy stock. But it has served me well. Remember that illustration, or not illustration, but that example I gave you about one of my stocks. I got $250,000 in it, and I'm getting a 5% dividend annually on that. Now, some of you might say that's too low. Some may say that ain't high, and I don't know. For me, it's perfect because it gives me an opportunity to continue buying that stock at a really low price. Because right now, that particular stock is probably trading around $45 a share, and historically, it's been 60, 65 a share, and it's from one of the big four. One of the big four banks in the United States, really one of the big four banks in the world. And so I know it's depressed right now artificially because of some regulatory things, but eventually that stock is going to get back to $60 a share, and it's going to be a windfall for me 5 or 10 years from now. And I'm patient, and I'm okay with that because I'm getting a 5% dividend every year. So I'm okay with that. Well, all right, guys, if the video was helpful, drop me some comments and let me know what your thoughts are on the discussion I just had in this video. I think it's a good opportunity for you guys to get out there and buy some stock and buy it now. So, and again, that's just my opinion. I'm not telling you what to do. I'm just telling you, open your eyes. If you're looking for a way to not have all your eggs in one basket, think about investing in the stocks, in the stock market. If you're stopping by the channel for the first time, please consider subscribing, share the video, and give me a thumbs up. It helps the channel and it helps me too. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, and I'll catch you on the next video. Peace.